So today we've got some funny moves to talk about that happened in the stock market and some data that came out and some more data that's coming up. It's a very interesting time these next few weeks and some strange reactions going on, and that's what we're going to talk about. We're going to talk about how the stock market moved off that data yesterday. So just before I get started on the video, I know a few of you guys have sent me a message already, and there is currently a fake Instagram going around of me. The one that is mine it's linked in the description, and I think it's like 3,500 followers. There's a fake one that has like 5,000 followers. So for all you guys that have reported that one, that's absolutely amazing. Thank you so much. And just be careful not to go following that one, and it might end up following you, and it probably try get you to buy some Bitcoin scam or message you on some strange WhatsApp number, so don't do that. But yeah, we'll get stuck onto what's happened recently. So the stock market, pre-market, slightly red, but on the day yesterday, same again, it was down, Dow was down 0.6, S&P down at 0.4, and Nasdaq was only down 0.1%. And actually, for most of the day, this was actually in the positive. It was only really towards the last hour or two this actually started downtrending, and this came off the back of the inflation numbers. And the inflation numbers, I mean, there's no way to put it, were awful. When I saw the numbers, I saw on the Discord someone straight away put, like, when it came out at like 1:30 for us, that it was 9.1%, and I was like, oh, you know, that's way over what we were expecting. I think we were expecting around 8.8%, and it was a lot higher than where we were wanting to be. And you can see here that if you look at the uptrend of the inflation, you can see that this was starting to consolidate, but you can see we just poked up slightly above where we wanted to be, and that upward trend is still slightly carrying on in the wrong direction, and that's the worrying thing. So the inflation numbers were, unfortunately, not as good as what I was hoping for. And what does that mean for the market? Well, when you look at the market's reaction yesterday, you would think it then go, so we had awful inflation numbers, but then the market just didn't seem to care. Like, this is why you can't predict the market. You would have thought that the market would have crumbled off these numbers. So I guess really, why did the market not crumble off these numbers? Well, I think there's a few things really. I think first of all, there's a lot of data coming out this week and a lot of earnings coming out this week. So I think the investors are currently waiting to see all the data first to digest that data. I think the second thing is that if you remember when we got the last set of data out, and the last set of data was 8.6%, and same again, that was a little bit higher than what we want it to be. It wasn't an actual instant sell-off when that data came out. It was actually a slow downtrend over like the next week or 2 weeks. So we're kind of waiting on still a few more bits of important data, which we'll talk about in a little bit. But as well as that, I think that maybe the market could be slower reacting like last time. That's also something to be careful of. And as well as that happening and inflation actually being up, I think a few people are looking at what is currently going on through the month of July at the moment. And obviously energy and food are two of the really key drivers of inflation right now. And what is going on now with, say, oil, for example. You can see oil has been dipping through the month of June, really peaking around that 9th, 10th of June. So you can see through June, we kind of had that, you know, the ramp up here, and through June until July, which obviously the inflation data that we have has been, you know, backwards looking data. Whereas if you look at a lot of the commodity prices at the moment, you know, from here, for example, you can see that we've been downtrending through the month of July, and I think a lot of investors are kind of looking, well, yeah, that's, you know, inflation data is up, but that's backwards looking data. And if you look at forwards looking data, you would suggest that hopefully inflation, when it comes down to the next time round, that's actually going to be lower. Now, we do always seem to be getting into this trend of going, okay, next month it'll be lower, next month it'll be lower. And when you look at the actual data, it's not going in the right direction. But that could also be a reason why investors were going, okay, we'll actually give it a little bit longer, we won't panic just yet. So I think that could be a combination of a few things to be looking out for. So the next data we'll get is for July would actually be the 10th of August. So that's currently going on in inflation. There's a lot of mixed things going on, and I think that's why Wall Street was very stagnant on that data release, because they're still processing it, I think, at the moment, and deciding where to go with this. I think it's also really important to be saying as well is that obviously with inflation going up this much, obviously it's not being controlled. And I think that one of the negative things that will also, I think if I was a betting man, I would say that this is going to be a slow downtrend that we go on now. Because I think what you'll also see is now the Fed are going to react to that, going, oh, we've done all these measures and the inflation isn't coming down. What we're going to do, we need to put interest rates up. Interest rates get hiked up, so people are now saying potentially a 1% hike in the interest rates, which would be absolutely insane. I don't think that's ever happened in history, or if it has happened in history, it's been a very long time since it's happened. So that would be a really crazy move to see that happen. And obviously, if you have inflation going up, interest rates going up, what's going to get hurt the most? Obviously, it's going to be them tech stocks, and they will go down the most. So that's key to watch out for. I don't think we're out of the woods yet, but I think there's a few people that are still optimist, having the optimism on it, and I think few people are like, oh, that's not great. So I think we're in a bit of a stalemate at the moment, and we'll see how that develops in the next kind of few weeks. Now, another really interesting point that happened is this came out, and this is a bit more on the UK side of it, but the UK economy grew. I love this title. The UK economy grows, and it grew way more than what was expected, but they just had to get this little title in of, but fears remain over rising prices. It can't be, when it's all this doom and gloom, it can't be just a positive title. It's still got to have that negative title, So the UK economy grew 0.5% in the month of May, which was very positive. Now, I don't think it actually has here what it was supposed to be, but I believe the estimated figure was potentially like 0.1%. If it wasn't, it was like 0.2%. So the UK economy grew a lot more than what was expected, which is massively positive, because you think about this is in a time when inflation is really high. You would think people are potentially cutting back on spending, and this beat analyst expectations by a huge amount, and it kind of gets rid of this fear of like that recession fear. People are still out there spending money, and this is what I've said so many times, is that people worried about a recession. Unfortunately, inflation can keep going up, but at the moment people aren't getting bothered by inflation. Maybe they spend a little bit less, maybe they cut a few things, but inflation at the moment won't affect the economy that much. What people are expecting. People are expecting a major recession that's going to go on because of this. Unfortunately, the biggest driver that will be the cause of the recession would be massive amounts of job losses. You don't have jobs, you don't have income. You don't have income, you're not going to go out and spend. So that's the main thing to keep an eye on. At the moment, people are still holding down jobs. The job market's still really strong, and sure, there is going to be them slowdown factors going on with inflation, potentially people not moving jobs, and income's not going up as much, and that will generally slow down the economy 100%. But this kind of big worry about a recession, unfortunately, we're still quite a fair bit off that. And as you can see here, we're still in a pretty good place at the moment. So that's obviously interesting to see as well. And I guess the next key thing that's coming up is earnings. This week, on Thursday or today, we've got JP Morgan, Morgan Stanley. We've got the start of earnings season. We've got two major banks reporting, and that will be a key driver of where we go probably today. If the banks come out and say there's good numbers, everything's looking okay still in the economy, then we probably still do okay on the stock market. That's what probably the next set of day everyone's kind of waiting for, and that's obviously going to probably be the most important bit. Actually seeing, at the moment we're kind of guessing how a lot of our companies are being affected and how the economy is doing, but more than anything, what's the key factor to determine how everything's going? It's actually listening to your company. It's listening to your company and your conference calls, and how outlook's being cut back, and they're saying how everything's going, how much are they being affected. That's the main driver of why we invest in these companies and stocks, and that's going to be the key thing. And when you look at something like an InMode, who came out yesterday with preliminary earnings, they come out with earnings that are absolutely fantastic and are not being affected. They beat EPS, they beat revenue, and then they hike up their outlook. So you got a company like this that's in this time frame absolutely smashing it, and that's been absolutely obviously rewarded on the share price recently. 5% pop as well yesterday, on top of what we had early on prelim results. So yeah, there's a lot going on, and I think that's what investors are kind of on the sidelines waiting for. Assessing, okay, that's bad inflation numbers, but at the same time, the data at the moment suggests that July could be the peak, and then obviously we've got banks coming out. We're waiting for a lot of our companies that will be reporting earnings in the next kind of 2, 3, 4 weeks. And obviously that'll be the key data, because we actually see how much they're being affected there, and that probably tells us more than what a lot of this data can. And yeah, so I think, yeah, there's a lot going on. There's a lot. Obviously, I think yesterday was. I'm surprised that it didn't go down, but I can see why Wall Street is kind of still waiting on some more data. And obviously, yeah, I mean, there's a lot of information to come out, and that will be probably the more key drivers of where we go. So yeah, surprising move, but there's still a lot of key data to go, which I think will be, help determine the market direction as well going forward. So yeah, it's a busy time. So that's the thoughts on all the things that have happened recently, inflation wise, recession wise, company earnings wise. So yeah, hope you enjoyed it, and we'll see what happens. It's still going to be a very interesting time in this next few weeks. It's going to be a busy time, but yeah, hope you enjoyed it, and I'll catch you in a bit.